What's up, everyone? Welcome to another live session. Today is July 10th. Happy Friday. I hope you guys all had a great week. Long week. Last week we had a very short week. We're back to regular weeks. In this session, we'll be going over a few of the trades we took this week, along with, more importantly, analysis for next week. Get prepared for next week so that we can do the work today and then relax on the weekend and then come in on Monday ready to go. So this week, common with the trend, a lot of the choppiness in the markets has reduced the volume of the trades that we've taken, and also the amount of pips that we're getting per trade just because of the deeper retraces. At the start of the year, we've been spoiled with nice clean moves, and even for much of the past few years, actually, we've been spoiled with nice clean moves because there was never a trade war or a potential World War III or a pandemic for that matter. But over time, things started to deteriorate between U.S. and China. And since 2017 and going into 2018, 2019, we had the trade war. And now we have a trade war with China and U.S., China and Australia, China and India. And then we also have Russia and Saudi Arabia going at it. And then we also have the pandemic. And then we also have, racial, issues in the world. A lot of social unrest. So we're in a crazy time, but based on that, all those factors and plus more, there's a lot of stuff that's happening through back channels that you don't know. But because of those reasons, the markets have been not as clean. At the start of the year, we were introduced with very nice clean trends, but then we had some choppiness in the markets, or a lot of deep retraces, manipulation, however you want to word it. And so, we had to kind of reduce the volume of the trades we took, kind of put extra precautions for our entry criteria, and to make sure we secure profit. So here's Aussie yen. Here's a simple short idea. And this trade was called yesterday, and we got a quick 15 to 20 pips. The reason being is today is Friday. Now, usually our first TP is 25 pips, but I made it 15 pips because it's Friday. And I didn't want us to be in 15 pips of profit and then price retrace on us, and that's exactly what happened. So I just closed out the full position at 15 pips. My MetaTrader did, and you can see here there's probably gonna be more downside. If you bust out the fibs, you'll probably see we're approaching probably 38.2 fib. We're at the 27.2, and usually a 50 fib is where we tend to pull back and go down. And so that 50 fib is pretty close to this horizontal ray, which we entered on, right? We waited for price to break it. We saw the inverted hammer. We entered short. We got a clean 15 pips. I think this thing will reverse back, reject it, and then go lower. I don't think, if you look at the price point, that this thing will reverse from here. The only problem is if you look to the left, you can see this huge wick right in this area, and it's very close to the place where we retraced, so that might be it. But I'm just happy that we got something out of this trade, and next week you can always see what happens at this 50 fib level. That price point is at 74,500, so that's actually a pretty nice psychological level, 74,500, and we should see what happens there. The only reason why this thing is pulling back is because Aussie dollar is pushing up to the upside, and whenever Aussie dollar pushes up, that's where all the miners go for the Aussie. And so the majors lead the miners most of the time. And so if you're ever in these trades and you see, if you're ever in a miner and you see the majors start to rally against the dollar, you probably don't want to short the miners. Okay. The other trade call yesterday was pound dollar, and we've been pretty patient with pound. For example, from going long, but it's just been so volatile that the moves never really give us clean entry. But yesterday we talked about the short from this high that we made in June. You can see it right here. We had a nice clean rejection, and we took the trade. We got a nice clean 25 pips TP1. Again, 40 pips. Going from Thursday to Friday is not bad, considering we started off the week with a loss with NZD dollar. That loss was only negative 27 pips, but still it's pretty substantial. And so because of that, we had to be very careful, because you can see even here, for usually in regular market conditions, GU would probably melt, at least to this point, at least if not even here. but it has pulled back sharply. So every other day the dollar is either bearish or bullish, bearish or bullish. We've yet to have months where the dollar is dominating, or even weeks where the dollar is dominating. So every other day the bias on the dollar changes. If you go to the daily FX, the articles one day will change with the articles the next day, and so it's just a mess right now, to be honest. Even in terms of swing trading things, because a lot of these swing trade examples tend to show reversals that aren't there, or they tend to show a trend, a continuation that isn't there, right? So, for example, here we had a major support break, and usually this thing would continue on. We took setups like this at the start of the year, where you take this break all the way down, but you can see, just this one bullish candle came out of nowhere, and that whole downtrend that we've had for a great part of the quarter has just been reversed, right? So it's just kind of how it is. We'll see how long it lasts. Again, we don't have a magic ball, neither does any trader, to kind of determine when this market phase or segment will pass, but we hope it's soon, like very soon. Yeah. So here we have this morning GUs just pushing to the upside. Now, if you look at the dollar index, which we were in focus this week, this was our kind of area to look out for, right? This 96.45 level. If we head over to our Discord where the chart work is, and show you guys. Here you go. So here's the dollar index. This was 2 days ago. Watch for reaction at 96.45. A very important level, right? And so you can see, usually when we have a reaction from this level, we tend to push up to the upside, right? You can have some strong dollar strength kick in. But you can see, we went halfway there, but in regular market conditions, and the dollar's not in such a tough spot, price would have went all the way up here. And if that were to happen, GU would have melted, EU would have melted, so would Aussie. But this thing, went halfway up there, didn't have the strength to clear this previous high, and then went back down below to 96.45. So because it's back at 96.45 on Monday, we'll look for reaction here, right? And determine what happens. So the important part about trading these type of setups is you have to understand that you need to get certain closures one way or the other. So we got a break below, and you can see usually when we have a break below, we'll go all the way down here. Now we didn't take this. I didn't take a buy on Aussie or pound because I had a bearish bias on the majors, and I was bullish for the dollar because the past 3 events for the dollar has been all bullish. NFP was great, manufacturing PMI was great, and then this week unemployment claims was great, right? So I was bullish on the dollar, and that's why I was more looking forward to the upside push. And so we got it. So we entered the the pound dollar trade. And it's just tough to see that this thing wouldn't drive all the way up. But again, every other day the sentiment around the dollar changes. So now moving into next week, we'll see again what happens at this price point. If we do break it, I don't think we'll go any lower than this low we made this week. It's also another common thing that price action is doing this, where it's like it creates a new low, it creates a new lower high, and then that lower low just doesn't push below the previous low. And usually that's our entry criteria for shorts, is when we're looking to continue with the trend and we've created a low, we wait for the pullback, we wait for price to clear the previous low, and then we enter short. Well, as happened is a lot of our setups, they remain pending because price comes to this previous low and it uses as support. And so it just consolidates, consolidates. It'll use as support, and this is counter trend trading. We don't like to take this because, for example, if we go long here, yes, the logical take profit would be this horizontal ray right at the top of this high, right? So if we go long from here, the logical place would be to take profit here. But what can happen is, and this is very common, is we can get, price could easily reverse here, price could easily reverse here, reverse here, reverse here. Any part of this uptrend, it could reverse on you because you're going against the trend. On the flip side, we like to trade with the trend because if we clear this low and we close bearish below, we're going down, right? We might have a push down and then a retrace back to this line right here, right, to this line right here, and then price will continue going down, which is fine, but it's much cleaner when you're going with the trend, and your stop loss can be very tight when you do that. So that's why a lot of the setups, if you look at the alerts, we've had like this is probably 30 setups, 30 alerts in the past 2-3 weeks, right? So the setups are there, you know, they're all over our Discord, but they're just not getting activated enough. Here's another trade that was activated during the London session, which is a session where I'm asleep, which we talked about CAD yen. So for those that got into it, you know, we wanted short. It was a very simple idea to short CAD yen. The bias, you could tell the bias for shorts was there since 2 days ago in June 8th. And June 9th we broke the support. We got that bearish candle closure at 5 a.m. It's always 5 a.m. in Eastern time zone when I'm getting my beauty sleep. You can see very simple sell-off. Now this is a clean move. We haven't had a clean move like this in a while. That's not against the trend. And so CAD yen, whoever got this, was a nice clean move around 40 to 50 pips, depending on where you got entry. But you know, so it just depends on, I guess, your luck and what time zone you live in. A lot of the people in Aussie and Europe tend to benefit the most with these current market conditions. But also on the flip side, stuff starts to happen during Japan as well, Japan session. So those are a lot of the steps we took, and also, oh yeah, we did get a loss in Euro Yen, so I'll show you that setup as well. And I didn't. This trade actually ended up taking my profit because I held on. But we took a short from here, right? From this candle closure, we were headed lower, similar to CAD yen. Okay, very similar to CAD yen. But price pulled back. Now I knew Euro Yen was going to go lower. I knew it was going to go lower. I was not buying into it. I called it a smoke screen, and so we did pull back sharply. We got stopped out, and then I moved my stop loss just about 30 pips above our stop loss, which is right above these highs. And then you can see price went here, it rejected, and I'll send my my trade logs and grain reviews to show you that this trade did in fact hit to take profit. And I'm saying this because as a trader, as your own trader, you can adjust your stop loss and your take profits. When you're calling signals, some traders might get too fixated on the R2R for a particular setup. And most of the time, R2R is 2.0 or greater. But certain times when there's a lot of market manipulation, you have to kind of increase your stop loss to that 1.5, 1.2 range to save that loss and end up getting in profit, right? Because this trade, if you held on to it, you would have got pulled back here. Yeah, you would have done some drawdown, but again, I only risk 1.5% per trade, 1.5 to maybe 3%. 3% is usually when the stop loss is 20 to 30 pips, but on average 1.5. So I knew that if I increase that risk to maybe 3%, it's not going to kill me. We had a really good March and April, so those months have kind of created a buffer zone, right? So again, Euro Yen, we had a clean move, but that clean move should have happened here, right? This significant sell-off should have happened here because we already retested that high a few times, right? Once, and then we failed to go up again, and that was my confirmation because price didn't have enough buyers to go here. That hey, it's time to short because we dipped below these highs down here. So that's the week. Now you can see Euro Yen is pulling back up. And this would be a decent buy. Again, it's against the trend. We can see looking to the left is a pretty nice reversal zone back in July as well, in the start of July. So the reason why this is going up is because euro dollar is going up, and that's what happens. Look at euro dollar. Yesterday it looked like it was going to completely melt. So yesterday it did melt, right? And you can see this blue zone I drew up, and that's where price reversed from, right? Yesterday, someone asked about euro dollar, right? But possibly shorts, and I said I wouldn't short it because of this blue support zone. Because we can come here and we can jump back up. You can see if we follow the arrows, we came down, we touched the blue support zone, and price rallied. And so, just very simple price action. You have price come to the support zone. You have a 4-hour bullish hammer, which is the candle we like to go long on, and price rallied up. So I do think price will hit this target and maybe even this target if the bearish bias for the dollar continues on to next week. So The dollar index 96.45. Remember that level. That's gonna be very important for how we finish off this quarter, and you know what happens with the majors. But you know, so that's the trading week so far in a nutshell. You know, very slow, but I'd rather have us not force the issue and gain too many losses. So most often than not, if we did have this rejection, we would have went all the way down here. We just went 50% of the way. That's still a good amount of pips, but you know, you can never really know for sure when price will retrace during these times, even with Fibonacci's and all that jazz. All right, so 25 minutes in, I went over the week. Now the more important thing is, and I think this is the most important thing, is preparing for next week, getting a good idea of what happens on Monday. So any pair recommendations? So morning everyone, Andy. I am using MT4 platform when I do managed account service with you guys. We do have a managed account service. It's called Smart Effects. It's by our Institute Trader, and you can use MetaTrader 4. We use ATC, FX Choice, Trader's Domain, or Blackwell Global on request. If you're interested, Andy, please email support@forexlens.com. People on YouTube send me your pair recommendations. I think I have a few on. Okay, so on Discord we have gold, RP 1900. So yeah, for gold, so here's another setup which we were patiently waiting to take twice. So we were waiting to go long after we break above 1800. Now, when we go long, we like to follow specific candles. You know, for example, we like to see bullish hammers, right, where the wick to the bottom is on the one to the top before you go long. So you see at 1800, we had, you know, a candle with equal wicks to the top and bottom, a bullish candle with a long wick to the top with none to the bottom. These are none of the candles we like to go on. Again, this is a very volatile move. This happened during one of the fundamental releases during earlier in the week. But since then, we've pulled back from this 1815 level, and we've just been waiting for price to cross above. If we do break 1815, we're looking to enter long to go to 1850, and then finally 19,000. Remember, guys, my target for gold for 2020 was 1800, and I made that back in December 2019 when gold was at 1500. So 3,000 pips later, you can see we have a real opportunity to go to 1850, 1900, and maybe even 2000, depending on what happens. So if the pandemic continues on, it continues going worse, and countries start locking down again, you'll see the safe havens, such as gold, start to benefit a lot. So right now, gold is pulling back. It's looking like it wants to go a bit lower. And gold is known to do these deep retraces. It's not a complete reversal. So if you look at, you know, for example, this is a pretty deep retrace. Many newbie traders will think this is a reversal. It's not, and neither is this. You can even look at periods of this type of price action where you have a significant sell-off and you clear the previous low, but it's not a reversal. So because the uptrend is so strong with gold, the only thing I'll be looking for is longs. The only time I might even consider shorts is if we get back into this range between 1788 and 1765, right? This range down here. I doubt we will do that. If anything, we'll come here, do a deep retrace, use that as kind of some support, and then just push back up. Okay, because you can see every time we have a retrace, we have a larger bull run that follows. For example, here's a bull run, here's a small retrace, a bigger bull run, then retrace, a retrace. You know, pretty huge retrace here, and then a pretty huge bull run here. So because this retrace is pretty small, I think if we break above 1815, the rally we're going to get is huge. And I might just enter based on the 1 hour time frame, to be honest, or any 4 hour bullish candle. I wouldn't be too worried about the wicks, but you know, I'll make sure the R2R is good on that trade if we do that approach. So to answer your question, I think 1900 is still in play. If we break below 1788, we might take intraday short with a very tight stop loss. But for me 1815, and I think for everyone 1815 is the level we need to breach, which is the highs for the week for us to continue going up. Euro CHF. Now we had a trade for this. I had an alert. Got dinged last night when I woke up. If you look at it, you'll see the short trade idea. And here you have it. So here's an example of the price action, which has just been plagued in the markets. So if you look at this, right? So 8 pips. So here's our support. Here's our 4-hour low that we've made. And this is a potential trade idea that I plotted up because I wanted to call a signal for it. You can see, we had a 4-hour inverted hammer, and then price dipped down below, and then just completely retraced on us, right? Now, usually when we have the inverted hammer confirmation, price tends to melt down, but Euro CHF has been stuck with either being risk off or risk on, because you have Euro and then you have a safe haven like Swiss Franc. And so that's why I haven't been trading, CHF yen, USD CHF, or even Euro CHF too much, because of this kind of tug of war between a riskier asset and a riskless asset. And you can see this sharp pullback. Now I'm still thinking it's short. So for this trade, if I did enter, right, if I did enter this trade here, I'd hold on to it, because there's absolutely no way that Euro CHF is reversing from here, right? It's not clearing any of these highs, right? You can see right now it's failing to go any higher. It's failing to clear any of these highs. So even if it does clear these highs, the downtrend, if you look at the downtrend that we started, right, since June, it's too significant for price. And if you look to the left, where price reversed, if you look to the left, you have no support here. There's no reason at all for price to reverse from here. It is just the markets being choppy, being the way they are. You can see you had a 100 pip move in one direction, you're gonna have a 90 pip move in the other direction. It's just very, very blah, So Euro CHF, I still be going short. I once again wait for the break of this 1.06100 level and then enter, and then you'd be fine. Again, it's Euro CHF, so this stop loss is 28 pips, right? For this trade, it's 28 pips. So it's not like you're losing much, but that's the beauty of Euro CHF. But right now, it's been so choppy. It's disgusting, And it's also had a lot of fake outs, for example here. But again, this is why you don't go against the trend when you don't clear significant highs. I'm using that terminology a lot now because, for example, if you're in a downtrend, right, and you see this price action, you see these two highs, that's a significant high, right? You'd label that. Okay, we're in a downtrend, so you're looking for shorts. The only time you look for longs is if you cleared a significant high. Okay, now if you see price, you can see these candles coming up. Okay, cool. Right, you see these candles coming up again. There's no reason to go long again, even though it's created supports. Okay, cool. Price has broken up this recent resistance, right, over here. But again, you're not going long until you clear the significant high, because you're going counter trend trading. So look what happens. Boom, get stopped out. Have a great day. Thanks for the money, and the broker smiling in your face. So that's why until we clear this high or this high, shorts is the way to go for your CHF. And it's going to have these deeper pullbacks. I won't even be surprised if we have this move where price comes here, right, pulls back once more, and then we get that dip to this first target. I wouldn't be surprised. You can see that choppiness right now, right? So I'm bearish. You can even see right now it's turning into an inverted hammer. Yep. So that's the markets, and so that's why I say treat like a value investor. Don't be too fixated on stop loss and drawdown, because of the R2R. The move that we will catch or we're looking to catch is going to be outstanding. So Euro Yen, I treated it as like a value investment, and I made it 45 pips when other people took a loss on that trade. Same with the GU from last week, right? So it's all about being adaptive. I know it's not the most ideal way to trade, but it's the only way to trade right now that seems to be working. And so this is just going to continue to happen until we get some clarity with Corona. Next up, CAD CHF. So this was a setup I wanted to enter dearly yesterday, and you can see the entry criteria just become activated now, or try to. Very similar analysis to CAD Yen, but this is a different type of analysis. Here is CAD CHF. Here's a bearish flag pattern. What a bearish flag pattern is when you have a downtrend, right? So here's our downtrend. This is our flag pull. And then you create an ascending channel, which is your flag, right? You see how it looks like a flag? Okay, so when price breaks out of the flag, you have a short setup. Now, if you look at today's candle, you can see it's a bearish inverted hammer. This is a really, really good candle to sell on. Too bad it's a Friday, and we don't enter trades on Friday. If we do, we're pretty much out by 12 p.m. So this is a really good trade for next week, and you can see the inverted hammer is the confirmation we need. The reason why we didn't enter after the break of the channel is because we had this significant low, right? There's significant highs and significant lows, and this significant low is significant because it's a support, right? You have support here, you have support here, you have support here. And so if we break it, we are good to go short, and we have, look at the R2R on this trade, 5.42. And so if we enter this trade and it starts doing deep retraces like Euro CHF, because our R2R is 5.4, we can make it, can adjust it, and it'll still be 3.8, right? So that's the beauty of trading with the trend, and this is a bearish continuation pattern, right? This is one of the patterns I like to trade, and they did a study. Bearish and bull flag patterns have around a 70% success ratio, and when you add things like significant highs and lows, fundamental analysis, all that jazz, you can bump that up to 80-85% success rate. So this bearish continuation pattern should take us on the way down lower, with at least us getting this target, because again, you can look to the left, there is some rallies from this level in the past, and based on the choppiness of the markets, you might get a push here and then a rally back up, and so we'll be on the lookout for that. But again, that's around 110 pips that we have up for grabs. So CAD CHF is looking good for next week. On Monday, we'll go over the analysis and go over the price action and see how it changed over the weekend. But as is, it looks pretty good, and you can see here's the COVID-19 peak low we made. This is when COVID-19 was at its peak in terms of lockdowns. The world just froze back in March, and this is also a target of ours. So now we got an exotic. And so Euro NOK. Now, if you look at this trade, we actually have analysis for this as well. And we had a pretty decent, let me try to find it. It might not show up. It's okay. So for Euro NOK, we had a potential long idea if we were to clear this high. Now the price came up pretty close, right, back in the end of June, but it used as resistance instead. And then count the candles. This week it's been consolidating. If you look at the candles, here is 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, right? So Monday through Friday, it's been stuck here in this little zone. You know, it tried to break out earlier today, but it just came back again, right? So if you look at the actually 8-hour time frame, here's the 8-hour time frame. Here's consolidation. You can see price try to break above earlier this morning, and sellers push back in. So Euro NOK, I still say short just because that's the trend. That is the trend. Here is the last lower high. You can see this lower high is lower than this one, so it's still in fact a downtrend. We do need to create a new low. So if we do break, for example, and last time around we were looking to go short here, we do get a bearish candle that breaks out of this consolidation zone. And understand it's a bearish candle, not a wick like this. We want an actual body. If it breaks out, we can take a short with this as a first target right here. This last low we made, and then anything after. So that's my bias right now, but it's been consolidating all week, so there's probably nothing there to begin with. So yeah. Next up, any other pair recommendations maybe on YouTube? Quickly check. Well, let me refresh this. And each guy says is managed trading exact same as signal alert service trades. Well, institute trader, most of the yeah, I'd say so, relatively. But there may be some extra trades that will be placed on the managed account. The institute trader thinks that are nice. And also he's going to be managing the risk and the profit taking, so you don't have to handle all of that. Euro pound. Yes, euro pound. And I think we have a setup for this as well. So here's all the setups we discussed. And actually I'll go over them too. Euro pound. Do we have something for this? Maybe not. Yeah, we did. On July 7th. Tuesday. So euro pound, we had a 4-hour bearish closure below 0.89600 to go short. Okay, so here we have it. If you look at the 4-hour closure, below this level. This is a bearish hammer, bearish hammer, bearish hammer, bullish hammer, bearish doji, indecision candle, bearish hammer. So none of these candles gave us an entry, and therefore we couldn't take this short idea, right? Yes, they went into some profit, maybe 10, 12 pips, but again, the candle does not follow our price action strategy, and so we didn't take this trade. And thank God we didn't, because I mean, it hasn't done much. It's just pulled back. It's chilling. It'll probably make its way to this 0.89250 level. Now, because of the choppiness of the markets, we could actually take a long from this level, right? We could take a long back to maybe this horizontal ray. I think that's as high as it will go, and get a nice 30 to 40 pips. But euro pound, the reason why it's kind of consolidating is because euro wants to rally against the dollar, but so does pound dollar. And so when you have euro trying to rally, pound dollar trying to rally, and then you have euro versus the pound, it's kind of like who's gonna get the best of who, right? So you can see the trend is still down. That's why we went to go short. And so if it was the regular market conditions that we were used to maybe 3-4 weeks ago, we'd have had a nice significant meltdown. But I think the world is waiting for the U.S. Because they started reopening up very aggressively. Now, if they close back up again, then the entire world will probably follow suit. If they don't, then I think the world will start opening up, and they'll just deal with the cases and mortality, and then you should have clean moves in the markets again. So you can see, these clean moves back in May, right? We had either a sell-off, we had a rally, we had a sell-off, we had a rally, we had a sell-off. We had a consolidation, but when we break out the consolidation, we have a clear-cut move, right? We come to this resistance, we have a sell-off. When we break resistance, we have a rally, like always. When we break significant resistance again, we have a rally. But now it's not like that, right? So we have a consolidation, we break out, we don't even go to the resistance, we pull back sharply. When we break support, we don't have a complete meltdown, even though we're having a break, retest, rejection. So it's a complete mess, but I just hope it passes really, really soon, to be honest. It's a headache to trade these type of conditions. Alright, any other questions? Actually, before I'll let people decide any questions. Yes, please ask the admin. They're all great. They will help you indefinitely. Okay, so I'm going to go over some of the pairs that we didn't take, because I think that's important to know why you didn't take the pair. And then we'll go over any last minute questions before you run too long. So if you look at this week's trade ideas, there's a lot. And NZD CAD long, for example. I was very hopeful for this trade, and it finally has become activated. So again, today's Friday, which sucks, but all we were waiting for was a break above this level. Okay, now it took us 3 days to get there. So this was the 7th, Tuesday, Wednesday, Thursday we didn't do anything, and then finally Friday we broke above. Like, can you imagine? That's 4 days out of the week that we waited for a trade, and it finally became active. So you see today's daily candle is a nice bullish hammer. Perfect. This thing will rocket up to the upside. But again, if you count the days, Tuesday we didn't have entry. Wednesday didn't do anything. Thursday was close. Thursday I was getting hopeful. and then Friday didn't do jack until now. So what can you do? What can you do? So that was one example where, here's our requirement for our bullish closure above 0.9300. Here's that 0.89300 level, and you can see we're pushing up to the upside. If you look at the trend and the momentum we have, it's clear. Look at those bullish candles, very, very huge bullish hammers all over the place. You can see where NZD CAD wants to go. Looking to the left, whenever we break this level, where has price gone? It's gone up to here. We come back to this level, we use that support. Where has price gone? It's gone up to here. When we have come to this level, where has it gone? Up to here. When we've broken this level, where has it gone? It's gone up to here, plus some more. So that is why we took the trade. The weekly candle looks very bullish, as well as a bullish hammer. So this could be a setup for next week. Okay, and so believe me, we're trying here, but even pound CHF, if you look at this trade. Come on, trading view, what's going on? Guess it doesn't want to pull up pound CHF. Okay. Okay, it wants to pull up pound yen. How about pound CHF? Okay, here we go. Alright, let's go to 4 hour. So pound CHF, we wanted to go long, and actually this became active at 1 a.m. obviously London Eastern. So for those that took this trade, or should have taken this trade, this did become activated. Let's see how much we got after that first candle. 23.5 pips. Price pulled back to the support and then rallied. So this is a setup that should have been taken. I'm using the pip count just because I didn't get to take it. But this is a setup that was given, for our bullish closure above 1.18500. If you look at the level, 1.18500 is here. Here we have a nice bullish hammer. This is the candle we like to enter. If you entered, you would have went to 23 pips in profit. Then it came back to entry, and then it would have went back up to the upside. And you can see in total, you would have been up around 41 pips. So this is a winning trade that we had this week for those that took it. I'm pretty sure PZ late, and I think Jay and those guys that are up here in London probably got it. But I don't even trade this pair. I've never really had too much, experience trading this pair. I think I took maybe 5 trades for pound CHF in my whole lifetime. But it's nice. So this thing is obviously going to go up here. But yeah, you can see it's pretty simple analysis, right? And it's a simple trade. NZD long, another hopeful setup that you wanted to take in conjunction with NZD CAD. Let's see the patience, testing our patience. So let me just move this so you can see. We wanted to break above this level to go long, and you can see we spent many days trying to break this level, but we just didn't get to do it. And so with that, we didn't get the long, right? We ended up using this as resistance and price coming back down. And again, usually when you have this type of aggressive sell-off, price continues going lower, but instead it's using the past lows as support. And a lot of shorters are getting in trouble because when you go short, you're retracing this much, it's eating into your profits. Usually you go short and it goes all the way down, but this time it's probably going to retrace back up to this resistance again. And since we like to trade with the trend and we didn't get any confirmation to go long, we couldn't take the trade. So maybe next week when NZD CAD goes to the upside, this might make its way back above here and we get that closure to go all the way long. And our target is 71.500. Okay, so this is what we had to start the week. We spent a day and a half doing nothing, and then price sold off, and now we're looking at this. Okay, so that's what we have for NZD yen. And then NZD CHF short, another potential setup. And we're waiting for a 4-hour bearish closure below this level. We have our alert here to tell us when the level breaks. Of course, it didn't do it. It just, look at this. There's like 3 bullish candles, a bearish, bullish, bearish, bullish, bearish. There's no separation. There's no clear trend like this or trend like this. It's just choppy. So tough scene, but what can you do? And then also your NZD, which actually goes over our strategy a bit and the adjustments we've made. So here's Euro NZD. We are looking to go short this week. So we had a break of the support but this candle wasn't the candle we wanted. It's not the bearish candle that follows our strategy. So you can see price immediately pulled back up, and so now we've created this new low here, this new support. So instead of going short from this level, we're ready to go short from this level. And because that didn't happen, we once again didn't take the trade. If you look at the candles since June 9th to now, June 9th evening, it hasn't done much. So again, it's consolidated. Here's a strategy in very simpler terms. There's obviously more to it, but that is how the week went. It was very slow. A lot of the trading with trend setups just never became activated, and so that is that. So any last minute questions? If we're approaching the 50-minute mark, let me know before we finish off and consider the session done. Okay, so CHF yen and silver really quickly. So you can see CHF yen. Okay, here's a short idea that was given to members. Let's see on what day. And you know what? Thing with CHF yen is it finally has some clean price action. So we discussed it, but I don't think I sent it in. But here is the idea anyway. So we had a short idea because of this trend line break, and then this was me looking for a setup. You can see right here, very similar to our Aussie yen trade that we took, right? You can see, after you have the break of this trend line coming off resistance, price pushed down, and instead of going all the way down, it has retraced. And if you look where it has retraced from, all you have to do is put a horizontal ray right here. You can see when you look to the left, this was a last low, right? A last swing low before you went up, right? So that's what price is doing right now. So we are accustomed to retraces during downtrends, but some of these retraces are really aggressive. For example, this is a 60 pip move down, but it's around a 30 pip back up, and so that's a bit daunting when you're holding a short. But this was nearly identical to Aussie yen. If you pull up Aussie yen's chart, right? Trendline break, come off resistance, push down, and a deep retrace up. So next week, I do think if you just pull up the fibs again, right? Just connect the highs and lows. So here's our high, here's our low, and you can see 27.2. The 50 fib level is right near the horizontal ray that we drew up, which was our entry criteria to go short. So I think price will pull back up here, and then we will continue going lower. If it wants to be annoying, it could retrace from here as well, but I doubt it at this point. So that's that, and then silver. So right now, silver and gold are correlated. That's not always the case, but right now it seems to be that way. And we had a long idea for silver, right? To go to, if we break above 1840, we'll go to 18860, and we saw that we had a bullish closure above. Price went there, and then price came back, right? So again, when you have an uptrend, usually when you hit the first target, price will retrace here, consolidate, and continue going up. But instead this time, after TP1, price went all the way back to entry. So again, the choppiness is just unheard of. So it's just crazy, especially with all this momentum. We just pulled all the way back, and that's because every other day the dollar's bias is changing. So all it takes was one Trump tweet or one Trump press conference, and with Trump addressing the nation every single day because of Corona, the dollar's just flipping back and forth. So next week, hopefully it's better. We do have, the New Zealand pairs that are looking good to short, and so that's definitely there for us to trade. Any other questions? Ask me on the Discord. If you're not have joined our Discord just yet, the link to sign up is in the description of the video, and then you can sign up there, and then you can ask me there as well. So any chart work discussed today, I'll probably send on Monday, because if I send it today, people will think I'm telling them to enter now, and I don't want that to happen. So hope you guys have a great weekend, and we'll see you on Monday for another free live session. And if you're looking to join these live sessions, not just Monday and Friday, but you want to join all of them and get access to all my chart work, Institute Trader signals, and our 10 signal providers. If you look at our new signal providers, we have 10 signal providers. We have price action, Ichimoku signals. We even have a trader just for gold. We have Elliott wave analysis, all that good stuff on our Discord. You can get 50% off this month. All you have to do is use first 50 at checkout, right? Use first 50, the coupon code. You go to our website, where you go to Forex Trading Room, you click Get Started, and then you fill out this form. Okay, so the apprentice, you want to do that, which gives you all my live sessions, all of Institute Trader signals, and then all these signal providers plus more. You use this to get 50% off first 50 at checkout when you click next. Okay, first 50, capital F 50, and you will get 50% off. So it'll only be around $73.50 for all that content. You can't get that anywhere else. Anything else you guys have, shoot me on Discord. Again, have a great weekend. Be safe, and I'll see you on Monday. Peace.